everyone, to episode 52 of Top of Mind with Consilio Wealth. On today's episode, we've got three hot items to talk about. By the way, it is June 28th, 10:05 in the morning, Pacific time. It is the day after the debate. I don't know if anybody watched the debate last night. So we have a couple comments on it related to markets. We will not get into digesting the debate itself. I think the media has done a fine job of that today. My phone keeps blowing up with all these articles. So to the main event, first topic for today, consumers seem to be running out of steam. It looks like buyers are trading down prices. And so we thought we would show some data with that and see, just talk through kind of our thoughts on the potential impact of the economy. Inflation report came out today, and it was generally good, which was generally predicted, and that's also generally good. And then finally, based on that inflation report, the Fed's plan that they will likely have communicated that they'll move forward with in terms of interest rate cuts in the future. All right, let's kick it off with consumers running out of steam. So you had pulled some interesting information here on how consumers were changing around their spending based on higher prices, and also what some retailers are doing related to that to try to keep their customers. So what are you seeing?
Yeah, seeing a lot of anecdotal comments, but enough of the noise to make it feel like there is a trend brewing where people are not spending like there's no tomorrow, at least in certain areas, right? If you go traveling to hot spots, I don't know if you've done recently in the Pacific Northwest, but there's still hot spots in California that are wildly overcrowded with tourists. But I think broadly speaking, at least on the hard goods side, I think spending has slowed so significantly that we are seeing a lot more discounts from retailers. And we're seeing store closures, right? The latest was Walgreens is closing 20% of their stores.
Saw that.
So that kind of got me thinking, and more of a broader conversation between me and you was, when you're a Walmart and you raise prices up to the level of where Target is, and again, it isn't much, speaking for Walmart to Target, at what point are Walmart shoppers suddenly ex-Walmart shoppers and new Target shoppers? Because the price difference is no longer there,
right? But
the shopping experience might be pretty different from Walmart to Target.
And the products too. I mean, I think what's interesting there is if I'm shopping for, let's just produce, I'm shopping for produce and I get all my stuff at Walmart, and I'm noticing that prices just, they seem to be kind of sticky. They've gone up in the last couple of years. They don't seem to be coming down. Things aren't on sale. Maybe I'll try a new store. So I walk into Target, and maybe I observe that certain things are a little cheaper. Apples are $1 less a pound for the apples that I like, stuff like that. I think our question, How, is, and what we were talking about earlier before we hit record is, am I now a permanent Target customer? Or do I at some point rubber band back to what I knew, which was Walmart? I think it's pretty hard to switch what you know. But then how often do people switch back once they've already switched?
I don't know. And I think everyone switched, to be real, everyone switched to Amazon.
Fair.
But admittedly, we do shop Walmart because it's just so much closer than the nearest Target for us. I could tell you that, the people who do shop at Walmart are cut from a different cloth. They're a little eccentric. Not to say that all Walmarts are like that, but you've seen the memes of the people at Walmart, and I don't think I've ever seen from memory the people of Target, and you got a funny meme out of that. It's people seem more normal.
It's an interesting point. Yeah,
but I go in and get what I need. But if there were a Target near me and the price levels were the same, more likely going to Target.
That is interesting. Yeah. I mean, if they were close and you were to go buy the same things twice, bananas, carrots, all the stuff, right? And then compare the bill. how different is it? And I think, what we're seeing here in the data is that retailers are seeing customers switch down. Nordstrom, for example, have seen a lot of their customers switch from Nordstrom to Nordstrom Rack.
Rack, yeah.
And they interestingly own sort of that vertical integration there, whereas not a lot of brands own.
McDonald's doesn't. Yeah.
Yeah, great point. Yeah, let's talk about that. So, McDonald's, we were talking about that before we hit record too. McDonald's and some fast food restaurants raising their prices, and now it's like, well, now you have Chipotle prices.
Yeah. If I'm spending Chipotle money at McDonald's, I'm going to go to Chipotle.
Totally.
Right?
Yeah.
And if I can't think of a upscale Mexican chain or restaurant, but
maybe like a Qdoba, like something like that, right? Like big chain that's not the same flavor as Chipotle, but
correct.
Probably a similar marketplace.
Yeah, I think what we're saying, there's an upper limit to the price raises, because if the group ahead of you, or the perceived group ahead of you, isn't raising their prices as much, and your price increases are going above, let's use McDonald's as an example, going above Red Robin, I'm going to Red Robin for the same price 10 times out of 10.
Yep.
Why would I pay relatively more in terms of value for McDonald's when I can get better quality at a sit-down
right.
Shake Shack or
right.
Red Robin? And I think that's what these companies are realizing pretty quickly, because the tune's changed, right? The earnings calls since 2022 have all been, our costs are X, we've raised our prices by Y. Mm-hmm, and the price increases have always been higher than the input increases, because you track McDonald's profit margins, they've been growing by double digits over the last 2 years. And the CEO, Chris, also named Chris, have been bragging about the ability of McDonald's and their loyalty of the customers. They've been able to eat those price increases. And I know they've come out and said, well, the price of a Big Mac's only come up 21% over the last 2 years, when they're fighting social media outrage, right? Because we'll hit in Chipotle in a sec, but McDonald's came out on TikTok in Connecticut, right, where it was a $18 Big Mac meal that everyone
I didn't see this.
Yeah, they raised this real big stink about how expensive McDonald's gotten, and their model is through franchise. So the franchisees set the price. Really, McDonald's can give them breaks by saying, here's a promotion, we're going to help you subsidize it, but ultimately the prices are set by you. And this was, Connecticut, this was a pretty uppity area in Connecticut where, maybe people could afford to pay $18 for a Big Mac. You're
saying for just the burger, not like the combo and everything?
Big Mac meal, sorry.
The meal, okay.
Yeah, the meal here I think goes over $11 in California.
Interesting.
So that was a big stink. So McDonald's executives all came out on social media and said, here's the average price, right, nationwide. The Big Mac has increased by 21%. So this 100% increase is a bunch of baloney, but they had to come out and dispute it because the social media impact was so powerful.
If you tuned into our last episode, episode 51, we talked a lot about how inflation since 2020, if remained on the path it had been on since forever, since this chart goes back to like 2014, right? We'd be up 9% from 2020. So, pretty calm, cool, 2 to 3% a year. But since it's been through what it's been through, we're actually up 21% on prices.
Right in line with the Big Mac. Yeah.
Right in line with the Big Mac index. So I think that's interesting that, they've paced, but they've paced kind of with expected costs, really.
Yeah. And Chipotle has been in the news too because their portion sizes, right? So I know this seems to be our favorite topic about how expensive burritos with guac have become, but some guy in New York went to 80. I don't know if they had that many Chipotles in New York, but he ordered 75 burritos and he weighed weighed them all.
Ooh, this is good. I like this data.
The variance of it was so insane that yes, the scoops are different, and the biggest delta between like biggest bowl and smallest bowl was like 2x. And he didn't specifically order like more meat or anything on that. So the variance was so crazy that he charted it out, which this guy seems like the funnest guy in the world or the worst guy in the world. I can't decide. But his portion sizes peaked out at, it was a bowl, to be clear. This is on Sherwood News. Peaked out at 27 ounces.
Okay.
And the worst one peaked out at 14.
Ooh.
For the same order. All in the same region.
Okay, but when you're standing at Chipotle, aren't you looking at everybody that's filling the orders and you're like, oh, I want to go to that person. That person looks like they're putting extra meat on there, right? Aren't you looking through the glass and you're like seeing how they're building them? Because you can see the one that's like only taking one pinch of like barbacoa or something, and then the one that's like actually giving you a good bit. Like, are you doing that, or am I the only one that does that?
You do that? You're just like, I want this worker.
Everybody does. No, you can't pick, but I'm saying like, oh, I hope I get that one, because there's maybe two people, maybe three people that are filling the orders.
I don't know. I never personally had a portion control issue with Chipotle. Yes, if they skimped on some of the rice, I say, hey, can we get another half scoop? But also the social media end of Chipotle was take out your phone and film the worker.
Oh yeah.
And that way they're being guilted into giving you a full size scoop.
Okay.
Apparently that's been such a thing that Chipotle's CEO came out and said, our portions are correct. This is just a social media craze, but here's some inconsistencies here where, yes, 27 ounces for the biggest portion, 14 ounces for the smallest portion. That's a wide dispersion.
Yeah.
I don't know if the workers are being told. I doubt it, because with that many Chipotle workers, we're going to get a whistleblower, right? So I think it's more of, one, the workers might not care, right? Like, they're being paid so many dollars an hour and they help thousands of customers a day. They're going to have scooping inconsistencies. Maybe.
Sure.
I don't know. I don't know what the real driver is, but that's a pretty wide dispersion. Maybe get measuring cups versus, because they use slotted spoons, which if you shake your hand, you're going to lose some meat, right?
Well, what's interesting here is that you're saying it was the same exact order, because for like most of the things, it's the slotted spoons, right? And so that's pretty well measured. And they typically, like if they're doing the beans, they hold the beans up and they tap it to get some of the liquid off. I always appreciate the extra hold there because, it makes the burrito soggy. But like, hang out for a minute, and then go. I always find they put way too much rice because rice is the cheap part, and then they skimp on the protein sometimes. So I would agree with you, like portion control is no issue at Chipotle. What I'm after is like,
consistency.
Give me the reasonable scoop of the protein.
Yeah.
And I think they use the scoop for the chicken, but for the pulled meats, they use the
tongs.
The tongs,
Yeah.
Thank you. And that's very, very
subjective.
Very subjective. Right? Yeah, exactly. So I think that, possibly they could just implement a little scale or something and everybody gets the same amount of weight of meat, something like that. But, yeah, I think there's definitely, it's like when they do the one scoop of chicken and then the person making the burrito is like not quite satisfied, so they go back in for like two more little chunks and they put it on. It's like, yeah, that's the person you want. So, that's what I'm looking for when I'm standing in the Chipotle line, like who's doing that? Who's topping up?
Well, just get your camera out and pretend you're filming the person, which I think raises all kinds of other issues, but if you have to resort to that for your burrito, then
there you go.
Yeah.
Okay, so how do we get here? So we got here talking about how
lower prices.
Yeah. We got here talking about how several retailers have started to lower prices to retain customers. Because if, for example, Walmart is losing people to Target, we tend to think it's pretty hard to then go back to Walmart. Not anything about the experience. It's just simply once you're somewhere, you're kind of there.
Yeah.
And so I think it's interesting and good. I am for this. Some of these retailers actually pulling prices down to try to retain customers. I think that's a really good thing.
Yeah.
So this kind of comes into the inflation report as well, because inflation was good news today. So let me have you unpack that too. Like, what was released today? Was there anything surprising in the data? And let's just talk about that for a minute.
No surprises. I wasn't saying no to you that I didn't want to respond, but
Yeah.
PCE came out today, and it came out at 2.6 annualized. So PCE inflation is personal consumption expenditures. They call it the Fed's preferred inflation gauge. It's what people spend on, right? This number does always get revised, because how do you reasonably track 330 million people spending? But you know what I mean? I mentioned it before, where CPI is more of a fixed basket. So if there's something in CPI that isn't sold because it's priced too high, people aren't going to buy it, but it still reads in CPI. PCE is different because it should pick up those people making substitutions, right? If eggs are too expensive or chicken eggs are too expensive, people will upgrade or downgrade to duck eggs. Again, horrible example. You can't buy duck eggs.
Duck eggs are more expensive, but I get your example. Yeah, that's good.
You know what I mean? Like where
Yes.
apples are too expensive, people will shift to oranges. PCE should pick that up, right? So it came in at 2.6% year over year and grew 0.1% month over month. I know we've kind of...
That's good.
Yeah, went back and forth with month over month, and who cares about year over year, because last year is last year. But the trend is obvious, month over month or year over year. The trend is down, and the market expected 2.6. We got 2.6, and the market is flat. The market could care less, which is, I think, is a good thing. I'm going to refer to myself. I wrote a piece about the moment where we don't talk about inflation. Remember that in 20...
Are we there?
No, me and you keep talking about inflation because that's the only
true.
thing in the news. But I think once we forget about inflation, it might have been too late to buy the low. Well, buying the low was in, the fall of 2022? Because the market hasn't really looked back since, right? So the moment where we don't really focus on inflation, I think, meaning the market, I think that's happening now. Right? We got a pretty good inflation number. Yes, prices are 2.6% higher than they were last year, but they're not 9% higher than they were last year in August of 21, right?
Yeah.
So these numbers that are seemingly big, there's a history of them of the market ignoring inflation numbers because we didn't have inflation to speak of. So I think that's a big, big win with the market response today. Does that make sense? Where we got what we expected, we could care less.
Yeah, I think it's a big, big win.
Yeah.
So, and then what is the Fed saying? I think my question, really, to say it bluntly, is what's the Fed waiting for? I know they want 2%, but looks good. Let's start cutting. What's the Fed waiting for?
I don't know what the Fed is waiting for at this moment. They waited to raise rates in 2021, and it felt too late, right? They said, hey, we want to see a trend of inflation staying above 2% for the time being, and then it jumped to 4, 6, 9%. They're like, oh, yeah, maybe we should start cutting or start hiking rates. This is the same Fed, right? We still have Jerome Powell at the seat, and what's it gonna take for him to turn around and say things are pretty bad and maybe we should cut rates a little bit? I know they're afraid of a 1970s style reinflation.
Yeah.
But I don't know. I think this is different from the 1970s where their interest rates are impacting different parts of the economy that they had no intention to impact, i.e. home prices, right? Like, who would have thought people would stay in their homes because they're locked in at a 2.5%, 3% mortgage, and they're no longer willing to upgrade because they're making the sensible financial decision of not trading that 3% mortgage for a 6 or 7% mortgage. Like, who would do that?
I think that's predictable. But also that's part of what they were trying to slow, because housing is such a big contributor to economic activity, and they're trying to slow that. And
home prices should have gone down, right, with higher rates.
And it almost hasn't worked, right?
Yeah,
I mean, home prices haven't really come down. They have at the super high end price point, but not really at the mid and at the lower range, like nationally. And home sales, I mean, sure, they're down relative to the craziest period, but they're not like plummeted. Yeah, I think that's probably one thing that the Fed is still scratching their head on. Why hasn't this moved?
Yeah, and I think they're scratching their head because of the lack of control or power that they perceive that they have.
Yeah,
isn't really working in a post-COVID world where things do feel upside down at times, where things should work one way and they don't. Mm-hmm. Because all that did was, right, it constricted supply, and therefore house price went up. Mm-hmm. So if they lower rates, I don't know if home prices will ease. It doesn't sound like, fundamentally it shouldn't, right? Because if your mortgage is suddenly 5% versus a 7%, your affordability suddenly goes up.
Right.
Therefore, maybe the house price goes up.
Maybe, but also then the buyer pool is bigger. I mean, in theory, that should be correct, right? Lower interest rates should push real estate prices higher, and I think that was true kind of pre-rate hike cycle.
Yeah.
But they've still sort of crept higher a little bit here, and so what happens when rates fall? I mean, you have more buyers that can now qualify. That's really good news, and I think that's probably the worst thing that's going on right now is there's not as many people that can afford that same house at 6.5% or 7% as they can at 4 or 5. So more buyers, that's good, but more buyers can mean more demand and still same supply.
Yeah.
Right, because we're not going from 6.5 to 3 anytime soon on rates. Therefore, if my mortgage rate is 3 and I'm looking to move and I've got to go to 4.5 or 5, let's say that's long term where rates are hypothetically, I'm probably not going. I mean, that's still going to have fewer homes for sale. Now more buyers battling over fewer homes when rates come down.
Yeah.
And we continue to have this problem again. I don't know the solution for U.S. housing. I really don't.
I think what we just discussed, I'm pretty sure that the Fed behind closed doors is discussing that. Mm-hmm. We raised rates, housing prices went up. We cut rates, we think housing prices go up again, and we look like idiots. And I think
housing is still unaffordable.
They should look like idiots, but it was more for decisions back in 2021, not now, right? Sure. And I think you got to kind of look at it as a sunk cost. It's like, hey, the decisions we made back then really had an unintended effect. We need to reverse and then maybe reassess. I don't know what that does to their credibility, but the credibility now seems to be very shot. Right?
You think the Fed's lost their credibility?
I think they're getting very close to losing it again. They definitely lost it in the lack of hikes when inflation was starting to run rampant.
Waited too long.
Waited way too long. And then they started going 2 hikes at a time, 3 hikes at a time. You only do that because you are behind the 8 ball and you look like a fool. Mm-hmm. And they always said they wanted to be data dependent. The data's here, and I think it's improving. It's been improving for, the past 14, 15 months. Mm-hmm. And if that's not enough of a trend, I just don't know what is.
I see. So you're saying they're at risk of losing credibility again because if they wait too long to cut and things, and I get what they're afraid of. If we cut too soon, inflation spikes again, and then we've got to deal with that, and they don't want that. Fine.
Yeah.
But you're saying they could lose credibility again if they wait too long. Sorry, wait too long to cut.
Correct. It's too constrictive. Yeah, at least for the financial side of things, because, again, banks are paying out roughly 5% high yield savings. And I know Chris and I have always talked about the biggest banks don't, but for the financial health of things is banks do need a spread to make money on, right? So if I'm paying 5% deposits and I'm turning around and selling 6% mortgages, it's not really good for me.
Yeah.
So if you have enough banks that have that much financial strain, that's actually not good for the financial system. Like we saw regional banks fail. I think we might have a few more if this keeps up.
So, okay, so we answered this earlier in the year, and we talked about, is the Fed going to cut rates in 2024? And when we talked about this first,
we said no. We thought we were crazy at the time too.
Well, and yeah, let's come back a little bit, right? Because this was the time when the Fed was saying, we will cut 3 times in 2024. They had that in every time that they met. We're holding now, and we're going to cut 3 times. And the market was pricing in 6 rate cuts. Basically, the market was saying, we think the economy is going to deteriorate faster than the Fed thinks, and they're going to have to drop more than they've said. That's what the market thought. Then all that changed. There was that pullback a couple of months ago at the end of March, where the Fed removed that language in their commentary, and they said, we'll cut rates when we see fit. We're data dependent type thing. Yeah. They removed that language on we will cut 3 times. And the market dramatically repriced from 6 cuts to only 1.
Yeah.
So I know that I said there would be no cuts this year, and I believe you said the same, right?
Yep. Yeah, we have it on paper in December. We said no cuts.
I want to know what you think now. So given the data now, do you think that there will be any rate cuts this year or not?
This is a prediction I wish we were wrong on. So far, we've been right through 6 months. I want the Fed to cut. I think there's a symbolic gesture in doing that, which we've already seen. The market actually celebrated. This is kind of technical, but the Fed said no more hikes, and the market ripped higher.
Sure.
So you can't cut until you're done hiking.
Fair.
so the market took that little nugget and started partying, which kind of turned around that sell-off in April, and we had that May rally, right? And there goes all that sell in May, going away talk. But the Fed should cut. I want to be wrong in this prediction. I think we're at 5.5% interest rates. If it goes down to 5.25, what real difference does it make other than the psyche of the market, right?
So you're a yes, they will, or a no, they won't?
So there's 50% odds in September. I'm going to say no, they won't.
Okay.
They're hyper focused on inflation. Yes, we got a good PCE reading today, but prices, what do? They bounce around. So if we see something in July, August, or even September, that's going to give this particular Fed a reason to pause even further.
So do you think they cut it all this year?
If anything, they'll probably cut in December.
All right, so you're saying no September, yes December. So you think one rate cut, 0.25% in 2024.
Correct.
I'm going to stay with you on this. I also think they're going to cut 1 time. So I'm going to change. I previously said no. I think that they will cut in September. And the reason why I think that they'll cut in September and not specifically November, but even more importantly, December, is because
they want Biden to win.
No, it's because they want to not look influenced by the election.
Yeah.
And so, because if they do something in December, that could be, again, the Fed wants to remain looking very decoupled from the president.
They should be, yeah.
And they should be, yes, I agree with that. And so I think that thinking that they want to cut this year, they will do it a little earlier to remove that risk of thinking that it might be commingled with election outcomes. So I think they cut 1 time in September, and then they don't until 2025.
Yeah, well, and again, their target is about 3% federal funds rate. That's at 5.5%.
Terminal rate, yeah.
So what, 2.5% away, 0.25% each. That's what, 10 cuts that they have to get to their target. Yes. What does the world look like at 3%? I think that's something to celebrate.
Yeah.
But the market won't need that. The market will need just to see some stronger language that we're going to cut the next 2 or 3 times as well.
Mm-hmm.
Then you're going to get your rally that we've been seeing already, right? I wouldn't be surprised if we didn't see a rally at this point, because we've had a strong rally at this point.
You know what's crazy is I'd be shocked if they actually give that absolute guidance. saying
No,
we
they
will
won't.
cut
Yeah.
3 more times. We're going to cut this time and next time and next time. They're not going to do that. I think they're going to say we will continue to be data dependent, and we will do what we see is right. And they're just going to continue to surprise on the way down. I think, I doubt they're going to say. In fact, I think they probably wish they didn't say they were going to cut 3 times in 2024. Probably wish they could take that comment back.
Yeah.
Because all of it's priced in.
They're definitely eating their words there.
Yeah.
But we did see cuts in Canada and England and the Eurozone all cut a quarter of a bit. And what
the rest
does
of the
that
globe
do?
is starting to lower. You're right.
Yeah. And that strengthened the dollar even further.
Mm-hmm.
So I know we have a lot of conversations about the level of debt that the U.S. has, and I know it's concerning.
Mm-hmm.
But what other alternative in terms of currency do you have? Are you going to go to Bitcoin? People have been going to gold, but that's a trade that China has been all over as well because of their currency issues.
Mm-hmm.
So, yes, you're jumping into a trade with China, and gold's having its, day in the sun, but it doesn't seem like it's... One, historically, gold takes on stock market-like risk with bond-like returns. That's a horrible trade-off, right? You give them more risk for less return.
Mm-hmm.
Yet gold, the popularity of gold seems to persist.
Mm-hmm.
If the dollar weakens, gold, yes, might happen. Gold might help. But I think there's other things driving gold demand than a potential dollar weakening. But
Costco.
Yeah. Costco is selling out.
Yeah.
But I think the dollar weakening has been a forecast in the last 5 years from debt worriers. And I know we worry about the debt as well. It's really high, right? But I think there's other factors driving this that continue to make the dollar strong, right? Because every other region that we mentioned with the rate cuts, those savers, I'm speaking institutionally, are probably seeking out U.S. debt because we're paying officially the highest and most stable interest rates.
That's a challenge that I've always thought is interesting, right? When there's a chart you can pull up and you can see global interest rates, and you look at what countries are paying on their government debt, and the U.S. is one of the highest. It's been one of the highest for a long time, even when rates were basically nothing. And that's such a challenge to me, right? It's like we could lower rates because we can pay less on our debt.
Correct.
But it's such an economic thing for us, right?
Yeah.
How we move around rates. And I suppose it is for everybody, but what an interesting conundrum when the highest rated credit quality paper is also one of the highest paying. Yes, there's countries that pay a lot more, but you wouldn't want to own their debt.
Yeah. Do you want a 70% Argentinian bond?
Sure, right, exactly.
Right?
No, I don't.
Their inflation's 85%, so you're losing 6% on their bonds.
Yeah.
So, but if you were going to level out interest rates, let's compare the U.S. dollar paying 5% and the Russian ruble paying 5%. Which currency are you taking?
I'm taking the U.S. dollar.
10 times out of 10, right? Even if you're a Russian citizen, you're taking the U.S. dollar if you can.
Right. Especially because of the stability.
Yeah. That's another component of it that people aren't really considering. And they're trying to make a case for gold or Bitcoin. But if you're making a case for another currency, I can't think of another country or region's currency that even comes close to the U.S. dollar.
Yeah. Let's. I want to close with the debate and the election, and mainly why we wanted to just bring this up is because it's, of course, top of news, top of mind as of yesterday. So, what are your thoughts on market? Just what are you seeing the market doing today in response to how the polls have changed? Or maybe let me back up. How have the polls changed based on what happened yesterday? And then what's the market doing? Yeah,
prior to the debate, Trump was 66% odds-on favorite based on polls. So very similar to 2016, where Hillary was two-thirds favorite relative to Trump's one-third.
Mm-hmm.
So Biden still had a chance heading into the debate. And once the debate was over, new polls emerged, and it came out to be 75-25 in favor of Trump.
Wow.
So what the market really cares about is what are the polls saying leading up to November, and what's confirming or surprising. Surprises are never good for the market, whether they like it or not, but they like more certainty. So the improved odds for Trump was more certainty for the market, but again, pretty flat day. There's no response. Today should be a pretty big day, right? Post debate, post PCE, nothing. It's like you could draw a line to say how flat the market response is today.
Yeah, I think the reason why we wanted to bring this up is exactly that. The market is totally unfazed, and we're talking about this just because it reiterates prior points on, the outcome of the election really is unlikely to have much influence on markets. There might be something short term that moves, but long term, markets kind of just have a trend. Yeah. And so today, if I pull up Yahoo Finance, the headline, the biggest picture here is new inflation reading offers hope for Fed rate cuts later this year. That's the biggest news. And yes, there's some stuff here on the debates, but not a lot. McDonald's $5 value meal hits menus. I mean, right? This is all stuff we're talking about today. So I think our point is whatever side of the aisle that you sit on, I think that we would certainly caution investing based on the beliefs of those outcomes, or changing investments based on if you liked what the polls are saying overnight or don't like what the polls are saying overnight, because the markets kind of just prevail. If really good news comes out overnight that's a surprise, you typically see a big gap up or gap down.
Correct.
So markets often will jump 1% or more than 1% right at the open, or fall that amount.
And there's no opportunity to get that gap, right?
Totally. You had to be in yesterday, right? Yeah. When things closed out yesterday. But today, if you look at the trend, markets are basically flat as of today. They were up a little bit earlier, but they started about where they finished. And they sort of trended up a little bit, trended down a little bit, and who knows where they finished today. And that's more normal. So we're here to just kind of reiterate prior points. I know there's a lot of tension politically this year, but I think last night's outcome was validating that markets don't so much care.
Yeah, and if it's going to be more, if this trend continues, it's going to look like more of a landslide for Trump. The markets will already price it in heading into November.
Sure.
And the actual voting results versus poll results, as long as it shows a Trump win, there's going to be very little response from the market.
That is a good point. If it does flip in the actual outcome, that could cause markets to move, right? Markets, it comes back to what we were saying earlier about interest rates. Fed was predicting 3 times, market was predicting 6, and then markets went from 6 to 1, like literally overnight. And there was this big sell-off over a period of like 2 weeks, 3 weeks, right at the end of March, so into April. Everybody remembers that, right? Everything sold off quickly. And so that's the same thing that could happen if something that isn't as predicted does happen.
Because the market's still making a forecast, which we've proven that they're wrong. Yeah. But it's very quick to correct itself.
Correct. Yeah. Good. All right. Well, thanks everyone for tuning in today on our episode 52 of Top of Mind. We will catch you again in 2 weeks. Everyone have an awesome 4th of July next week. This will release right before then. So make sure that you listen on 4th of July and tell your friends about us at the barbecue. Thanks much.
Bye.
Bye.